Hello guys, so regardless of how bullish the market looks right now, this is starting to become a very, very good shorting opportunity. And I'm going to go ahead and explain why in today's video. We're going to take a look at the SP500, the NASDAQ, the Russell, the large tech stocks. I'm going to try to give you guys my thought process. It doesn't have as much clarity in terms of numbers, but my thought process has garnered results. So I'm going to go ahead and try to explain to you guys what I'm thinking and why I am starting to become a bit bearish here, and why I personally think the NASDAQ, currently we're at 519 on the NASDAQ. This is like a really good setup for example, the NASDAQ to hit below like 510, 500 soon, by next week. All right, so I'm going to go ahead and explain why. All right, so let's get started with the video. So first and foremost, I want to address this guy here. Bro came back after a month, mocking bears. Where were you for the past month? Losing money? Like, while you were busy wiping the stickiness off your stomach every night, this is what we were doing. So, this is what we went and entered long. The numbers obviously aren't updated, the percentage change. We bought the dip into early April when everyone was talking about 400 on the spot. While you were bearish, while you 100% were still bearish, brother, we bought the dip on all this stuff. The money that we made this month is probably enough for your entire trading career. Everyone in the group did very, very well. If you were in the group, you know, you probably would have seen the results, but you weren't. And everyone that was in the group, these were all of these swing trades that I posted in April. And, you know, clearly we caught the bottom, and we caught how much? Like almost an $80, $90 move to the upside on the SPY. We remained bullish. We just bought the dip. It worked out. While you had to continue refilling up on tissue paper. And, you know, I don't know, maybe you maybe you were like Charmin Ultra, who knows? But regardless, humble yourself. And I enjoy this sort of stuff. So if you guys want to continue showing hate, I'll give you guys attention, because, you know, that's what I do. But anyway, that's what I want to start the video with. All right, so let's switch gears real quick. Can we do that? Okay, so let's take a look at the large tech stocks first and foremost, because these are the biggest reasons why I think we're going to get a bit of a pullback. The large tech stocks as a whole are very far overextended. Let's take a look. And this is the Bollinger Band. Okay, we're looking at the Bollinger Band on the daily time frame of these large tech stocks. Tesla, for example, was trading outside of the upper level of the Bollinger Band, starting to show, you know, a bit of a pullback. I'm not saying this is going to happen like tomorrow. All right, it could. It could happen Friday, it could happen Monday, it could happen next week. But when things are very overextended to the upside, this is where it makes sense to stop being as bullish. Okay? Tesla. NVDA. Okay? Same shit. NVIDIA. AMD. Same thing. Look at how overextended this is. You want to start going long when it's fucking in the sky? No, you don't want to. So this is getting a pullback, right? Amazon. Same concept. Got a bit of a pullback, right? Amazon a daily. Got a pullback, right? All of this is pointing to weakness, potentially. And these are major players. NVIDIA, AMD, you know. Microsoft, not as weak. But when things are like teetering up, barely teetering up, you know, like you have to key off of the other stocks. Microsoft looks decently bullish, okay? Apple, what is this? We're at resistance. It could go up to 217, 218. But then from there, like even up here, is this a time where you really want to go long on Apple? Not really. Netflix looks pretty good. Not gonna lie. Netflix looks pretty good, right? Google doesn't look great. So the majority of these stocks did not look great. Amazon pulled back. NVIDIA, AMD, Tesla showing some weakness. Apple very close to resistance, not really doing much, right? So it's like, do you want to go long into these levels? Not really. Not really. It makes more sense for a nice, simple, like maybe 2% pullback. 2% pullback. And I want to also show you guys the S&P. Okay, so the S&P. Let's just start with the NASDAQ. Okay, so the NASDAQ is like the main thing of why I am just set up as bullish as it looks, right? So I was explaining how there was this trend line and, you know, this downtrend line that we were looking at, you know, multiple touches, this downtrend line that was acting as prior resistance started acting as support, and then once we broke down below it, it capitulated, right? And now we are trading back above that trend line. Great. Spectacular, right? The issue is that from a technical standpoint, from a purely technical standpoint, this is bullish. We are holding the trend line, and it looks like it wants to continue rising. This is bullish. But goddamn, does this look like an amazing, amazing opportunity for, you know, maybe even some upward movement, maybe some 524, maybe even 525 action, right? How much percent? Maybe like a 1.5% move to the upside, 528, right? Something like that. Get another 1.5 percentage move to the upside, and then a nice little slap down. That's what I'm expecting. Like, because the setup is there. The large tech stocks, cool. A lot of, for example, let me just show you guys. So this is what I'm expecting. This is what I'm expecting on the NASDAQ. Right here. Right there. That's what I'm expecting on the NASDAQ. Maybe a little higher, but this is like, it's so beautiful. This is like getting to a really, really beautiful setup for a move to the downside, in my opinion. Okay. And the reason for that is because, cool, if NVIDIA does get a pullback, we might get another little bounce, whatever, right? And then bam, it should drop. Tesla, we got a bit of a pullback. Great, it might bounce. It's just everything is setting up, right? Apple, cool, we might bounce to prior levels of resistance. Where's it going to go from there? AMD, cool, we might bounce. Where's it going to go from the bounce, right? What else? Netflix. Fuck Netflix. Google, right? It's already at resistance. Technically, guys, I'm telling you, technically, great. Looks bullish. Intuitively, based on the prior strength that we've seen in these large tech stocks, based on where we are on the chart, this is not a time to start going long. We entered long a little bit ago. We actually entered long a little bit ago, and those are doing really, really well, actually. So now is definitely not really the time to expect an explosive move to the upside. Great, it might. But from a risk-reward standpoint, purely risk-reward standpoint, it makes a lot of sense for a bit of a pullback. Another major reason why is the IWM is failing to break above this 210 level. The IWM is a big reason why the S&P 500 can be bullish. If the IWM is failing at 210, even if it rises to 212, 213, this is starting to, it's shaping up for some bearishness. It's shaping up and it's showing resistance. Okay? You can't really just aggressively be long here. And the SPY, we were showing resistance below 588, 589, 590, right, towards the end of the day. Even if it goes to 595, 593, 595, do you want to start going long at freaking 593, 595? Does that make sense? Like from a risk reward standpoint, just thinking about how long you've been trading. Is this the time on a chart where, okay, wow, you know, I missed this whole move to the upside. I've been a bear for so long. Let me just look at it on SPX. I've been bearish for so long. I tried to short this. I tried to short this. I tried to short this. Oh, gapped up. Okay. Oh my God. All right. Maybe I don't want to short this anymore. I don't want to go short anymore. We're at 5,900. I think it's time to go long. Does that make sense? Does it make sense to start being long after you failed shorting over and over again? No. Try to understand your mentality and your mindset. The vast majority of people are going to start piling into longs. Okay? The vast majority of people did not catch this dip, right? Just you have to go back to the original culprit. Okay? The original culprit was the vast majority of people did not buy this dip. Because the vast majority of people did not buy this dip, it jumbled up the thought process and the trades moving forward for this past month. And because the vast majority of people did not buy this dip, by the time the vast majority of people now become bullish, is not the time to start becoming bullish. It is instead the time to start becoming bearish. Or wait for a pullback to buy the dips. And that, my friends, is my thought process. That, my friends, is the main reason. There's no other main technical reason. The large tech, aside from the large tech stocks. But technically, the NASDAQ is showing strength above this trend line. But just because it's above a trend line does not mean it can fall below. Market moves based off of perception, based off of price action of the people and the participants. Anything can change. And this is starting to become bearish. Okay? So just keep that in mind. The main reason why it's starting to become bearish is because this is not a good time to go long. That's it. So that's my thought process. I could be wrong. It is what it is. But most of the time I'm correct. So that's that. I hope you guys enjoyed today's video. Please make sure to like, comment, subscribe, do all that good stuff. And I will see you guys tomorrow. All right. Love you guys. Have a good one.